Obstacles are placed in our way to see if what we want is really worth fighting for. What do you want? Do you want to master these charts? Do you want to be able to look at the stock market, look at particular ETFs or stocks, indexes, commodity funds, bond funds, whatever they may be, and be able to track them accurately? Do you realize the power of that, what that means for your future? Well, my friends, it is possible, but it's going to take you 10 to 15 minutes a day for as long as it takes. That's it. 10 to 15 minutes a day. At the top of the screen, you'll see a link if you want to purchase our book. Following that, you'll see a link to the Accelerated Market Mastery course. We're finishing up interviews, sending out invitations to those we have accepted, and we're going to be moving ahead with that course. It's a 3-month intensive. Focuses first on charting, second on options, third on building your own virtual personal wealth fund, your own mini hedge fund that you practice managing and coming up with a plan. What I find with so many people, just about everybody I talk to, they say, I need discipline and I need a plan. Well, my friends, that's what Accelerated Market Mastery is all about. And it also gives you the tools. Then you put a plan together with the discipline, 10 to 15 minutes a day. It doesn't take more than that. When you're taking the course, yes, there's some more time involved. You can find time to do that. But if you really care, you'll think about it. Follow the link in the show notes if you want to be interviewed. Now, let's keep moving. What do we see going on? Many things up for the day. Stocks, bonds, gold down a little bit, Bitcoin down a little bit. We see real estate and oil up. So let's jump first into this chart. Do you see? Now remember, what do we do on Wednesdays? We're supposed to forget everything, sit back. We call it back away. And you look at what the weekly chart is doing. Let's do that briefly on the S&P 500. We're going back a year, over a year. And we see the run-up, we see the crash, and we see the recovery. And what do we see happening now? We see a stalling after many weeks and a successful weekly vertical crossover practice trade, and then what happened? It peaked out back on the week ending the 12th of June. And what is it doing now? Now, yes, it was up for the day 1%, but look at how we had a red open box candle spinning top, a solid red candle spinning top. Now we have a green open box candle spinning top. What do we see happening? We see the market as it surged, as it slowed, and as it's now sliding sideways. Now the price percent oscillator is still going up. Derivative oscillator peaked back on the week ending the 5th of June. But I'm sorry, yes, 5th of June. And what we have seen happening now is, again, a slowing and a sideways movement. Look how we've penetrated the weekly trend line. Well, long ago, we went through, 2 weeks ago, we went through the 2-day trend line. So again, we're watching, paying attention to that. We look at the 2-day chart. You can see more of that sideways sliding down. Remember, we had a two-day crossover going down back on the 2-day candle ending Wednesday, the 24th of June. That represented Tuesday, the 23rd, Wednesday, the 24th. We have more of a down candle. We have the price percent oscillator heading down, derivative oscillator gaining downward momentum. Pay attention to that. Now again, if the market just digests these gains and then starts to surge again, that's one thing. But if it keeps devolving, what happens? And we need to go ahead and move our 2-day crossover over. Those of you who are watching live, you can see how easy it is to edit and change these, all the different things that are on the screen. And we use these as graphical representations of what's happening on our charts. And it is so easy to use in TC 2000. So watch. If you see more and more weakness in the weekly chart, get ready, get ready, get ready, because something is coming. Look at the 4-hour chart. We had 1.5 days of down movement, a little bit of recovery in the afternoon as far as the Heikin Ashi candlesticks goes, Price percent oscillator is flat. Derivative oscillator's about flat too. So that's where we are on the 4-hour chart. So look at the weakening. How long will it go on? Is the market done? Is the bull trap going to be sprung? My friends, time will tell. Let's go to the Qs, up 0.95% for the day. It looks better, doesn't it? Yes, it does. We see another week higher high. These are the tech stocks. We see the price percent oscillator heading up, derivative oscillator devolving a little bit. 2-day chart looks like it might be starting to cross over. Now remember, this is our lagging indicator, the price percent oscillator. The derivative oscillator, the leading indicator. Looks like they're both going negative. We'll see when the 2-day candle finishes drawing on Friday. Is that going to be a crossover going down? That'll be interesting, won't it? I mean, again, after all this up movement and things slowing and rotating, what is that telling you? It's telling you where the market sentiment is. Remember, that's what price tells you. It shows you the relationship between fear and greed, between what buyers and sellers are thinking and doing. That's what it tells you. That's why I don't care what the news says. I care what the market says. And the market says things in price, always says things in price. Look at the 4-hour chart, price percent oscillator heading down, derivative oscillator gaining downward momentum. Like the S&P, 1.5 days of down movement, a little bit of a pullback in or pull up in the afternoon. So we'll continue to watch, see what there is to see there, but pay attention to these charts. Be alert. Fill out your daily market worksheets, your weekly market worksheets, your trade worksheets. All those worksheets are available for free in your show notes. We go to 20-year bonds up for the day, 0.29%. Price percent oscillator still tracking down some on the weekly chart. Derivative oscillator losing downward momentum. Going into a second week of green up candles. The prior week had a wick on the bottom showing some weakness there. This week does not, and it's pushed through the weekly trend line. That would be concern for you if you were in a down move, which you should not be. What do we see going on with the 2-day chart? Derivative oscillator gaining momentum with that green going higher. We see the price percent oscillator trying to cross over. Green candle pushing through the 2-day and the weekly trend lines. We'll see how that candle finishes drawing on Friday. And of course, we had a crossover going up all the way back on the 9th of June on the 4-hour chart. It's gone up, gone down, gone up, gone down, going up again. Never crossed over fully. Tried to, and then popped back through back on the morning and afternoon of Wednesday. I guess the afternoon of Wednesday, morning of Thursday, the 17th and 18th of June. So we'll continue to watch and see. Again, what would you expect if the stock market were to crash? You would expect bonds to do what? Move in the opposite direction, right? Why? Because bonds are typically a safe haven when stocks aren't doing well. It's one of the reasons that we follow two stock indexes, the S&P 500, the NASDAQ 100, and what typically moves converse to those, bonds and gold. That's the reason we follow all four of those. What about gold? Well, gold down for the day just a little bit, 0.05%. I'm having a hard time seeing it with the light. But what do we see happening as far as the weekly chart goes? Green up candle. Is gold going to finish the week bouncing through, going up? Sure is getting close. We'll see what the day looks like on Friday. Is it going to be a big up day for gold, big down day, or just another sort of dud day? We'll see. We have the derivative oscillator is still negative, but a big green up candle for the week. Gold punched through its $64 ceiling, but now is hovering right around $65.80. So we'll continue to watch, see what there is to see there. Pretty much laminated as far as the price percent oscillator goes on the red signal line. We see on the 2-day chart, even with the down day, red open box candle, and that price percent oscillator's trying to push through the red signal line. We'll see if that happens on Friday when it closes. Derivative oscillator gaining upward momentum. go to the 4-hour chart, and we can see where things peaked actually on gold back on Wednesday, and how things are sliding over and down at this point. Derivative oscillator still positive but headed down. Sorry, price percent oscillator still positive but headed down. Derivative oscillator peaked back on the afternoon of Tuesday the 23rd and has been moving sideways and down since then. That's where we are, folks, as we finish our top 4 charts, the ETFs that we track for you every day. We have 3 add-ons for you. We'll go over those with you quickly. Those of you who just wanted that information, filling out your daily market worksheets, you're done. Don't forget, at the close of the market tomorrow, what will we be doing? We will be doing our comprehensive review and forecast for the weekend for you. And again, want to know more about that course? Well, there'll be a link at the end of this video for the Accelerated Market Mastery course. Thanks so much for those of you leaving us now. We're going to jump into Bitcoin. Bitcoin, we always start with the weekly, down for the day, 0.70%. What do we see happening? We see weakening in the price percent oscillator. Derivative oscillator still green but losing momentum. Bitcoin peaked all the way back on the weekend in the 8th of May and has slid sideways since then, trying to move up but just not getting the energy it needs. Go to the 2-day chart. That's where we see the real devolution. We saw things cross over going down back on Friday the 12th on the 2-day chart. Went down that next 2 days, then sort of sideways trying to get something. And then, of course, this first day of this latest 2-day candle down. We see the price percent oscillator moving down, derivative oscillator gaining downward momentum. Go to the 4-hour chart, and of course it had crossed over and then crossed back over going down. 2 days, pretty strong down movement. Is it going to bottom out again somewhere around the $9,200 mark or so? Is that going to be a sort of an intermediate bottom? Don't know. We'll wait and see how that works out. But Bitcoin just not being able to pull it together and get its momentum back at this point. Go to real estate, up 0.28% for the day. Now, it's been a down week overall. We can see on the candle, it is a red down candle, long wick on the bottom, a little bit of a wick on top. We actually saw real estate peak all the way back on, well, it's not far back, a couple of weeks back on June the 12th. That was the week ending then. And it's then lost a lot of its energy over that next weekend. This week, price percent oscillator, we can see how it's lost some of its upward angles, just about not quite flat, still heading up a little bit. Derivative oscillator losing momentum. Go to the 2-day chart, and of course it may very well end up at the end of the day on Friday with a 2-day crossover going down. Don't want to see that, but again, maybe it'll gain some energy, cross back over and give you an ability to jump into a 2-day recross. Maybe real estate's done it, folks. Maybe it's had it and it's heading down. If that is indeed the case, maybe that's portending for us the market collapsing after the bull trap when it springs. Don't know. Don't know that that's the case, but we're thinking about those possibilities. Go to the 4-hour chart. We can see how the market was down in the morning, recovered a little bit in the afternoon as far as real estate goes. Price percent oscillator flattening. Derivative oscillator in the afternoon losing some downward momentum. So we'll wait and see how real estate sorts it out. USO, look at that. It was so primed to cross over going up. It was up for the day 2.53%, but I don't know that it's going to push through with a weekly vertical crossover. And thank you to everyone who has been making suggestions on a new oil fund to track. I'll make that decision over the weekend. We'll have that for you by Monday. We'll figure that out. Now, what do we see going on as far as leaving the weekly, going to the 2-day? I mean, what do we see? We just see a sideways slide as the economies of the world continue to suffer. You know, we see the price percent oscillators lost a little bit of its momentum right there, trying to penetrate the 200 period moving average line. Look at how much we have seen the Bollinger Bands tighten. What does that tell us? Well, it tells us volatility. After this huge drop in USO, that is in oil, we have now seen volatility just shrink. So the tighter the Bollinger Bands get, the less volatility. Starting to look like a utility stock in here, isn't it? And the price percent oscillator still heading up some, derivative oscillator losing momentum, losing upward momentum. And of course, the 4-hour chart crossed over going down, big down moves on Wednesday morning and Wednesday afternoon. A little bit of a recovery Thursday. That's where we are, folks, as we end the day. I'm actually working on a great new training for you. I don't know if I'm finish it up tonight or tomorrow, but it is on. I'll give you a little preview. It is on what to do when you're ready to take the next step after paper trading. And it's not jumping full scale into markets. We don't give any trading advice. We're an education firm. But I've got an idea that would allow you to get your toe wet without sticking your whole foot in the water and without taking any risk, but will give you the ability to start doing some things, developing some habits, and seeing if you really are that good. I found that it's way too easy to cheat as a paper trader, and this method will keep you from cheating, but will not have you risking much of anything. So stay tuned for that. And again, if you are a subscriber, look in your show notes. Guess what you will find there? You will find a great training that we have prepared for you. And it is the magic of the weekly vertical crossover, which I think you'll get a lot out of. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.